That's good to hear. I should mention that this case was not one of the IFPRI projects, so it's not going to look like the ones you've just seen. I don't have any pretty GIS things about travel to town times and things like that. This came out of discussions I'd had with Maggie over a long period of time, and to do with some research she was doing on Botswana, so she asked me to put together a presentation for this event. Just to start off, I should mention just some basic facts. Botswana is unlike any of the other countries we've been talking about. It's a mining economy driven by diamonds. Botswana is the largest diamond producer in the world, and is also a very large country, 550,000 square kilometers, with a very small population, less than 2 million people. So unlike we heard with Malawi, population density of 130 something per square kilometer, Botswana has less than 4 people per square kilometer. You'll also see it's very urbanized, so in the rural areas the population density is only just over 1 person per square kilometer, which has big implications. I'm going to talk about key developments and structural challenges, and I'm dividing it really into 2 periods of structural transformation, and the first one is from 1970 to 1990, which was when the economy changed from being an agricultural economy to a mining economy based around diamond mining. As many people know, Botswana is generally perceived as being well managed and having avoided the resource curse. And indeed there has been very high growth, but the economy is not diversified and there are problems of unemployment, poverty and inequality. Then the second structural transformation is, I think, what is needed and what the country is facing now, because the diamond deposits, which are very large, are projected to be exhausted by 2030. So I should say they were large. They're not so large now. And the question is, from being a mining-led economy to what next? And at the same time, as we'll see, government has been very dominant, but there are emerging fiscal challenges, and there is a need for quite a dramatic change in policies and the direction of incentives, etc. Just to look at the key characteristics, there has been a dramatic transformation in the structure of GDP. If we look here at shares of GDP, this goes back to 1974. I don't know how clear it is, but at the very beginning, the bottom area, the black area, that's agriculture. That's when the GDP data really starts. If you go back further, the diamond mining started in about 1970. If you go back to the 1960s, agriculture was more than half of GDP. But you can see that agriculture has declined from 25% in 1974, and it's now about 2% of GDP. So the agricultural sector is tiny. Mining has grown to be about 40% of GDP, very, very large. Secondary, which is manufacturing, construction, etc., has been fairly steady. But what you can see is that services has grown quite steadily, and also that government itself is a very large sector of the economy. And government is largely financed by revenues from taxation of the mining industry. One of the characteristics of diamond mining is that it is very profitable. Botswana has very large and very low cost deposits. And it's a very profitable activity, and government has negotiated some quite good deals with the mining companies, and I guess Ghana might not like to hear this. The rate of profit on Botswana's diamond mining is about 80%. So 80% of sales value is profit, and the government gets 80% of that profit in taxes. So it's taxed at a very high rate of a very high rate of profit. We've also had very rapid economic growth. If we look at real GDP per capita going back some 40 years, you can see that if we take the dollar one, which is the green line on the right-hand axis, we've approximately had a tenfold increase in real GDP per capita over that period of time, and this is in 2005 dollars, I think. So Botswana is now an upper middle income country in terms of GDP per capita. And this shows the different sectoral growth rates over the period from 1974 to 1990, and you can see on the right here, mining has been the fastest growing sector of the economy. Overall growth rate averaging about 11 or 12% in real terms, but agriculture has not just been the slowest growing sector, it's actually shrunk. It's had negative growth over that period. So it has really lagged extremely badly. Other characteristics, as I mentioned, rapid growth of government. Government's the largest employer, about 40% of formal sector labor force, and government expenditure is about 40% of GDP, but generally spent quite well. If you look at the structure of government spending, you can see nearly half is on social services, and about a quarter of all government spending goes on education. So what that means, with government spending about 40% of GDP, that means that public education spending is about 10% of GDP. It is very, very high. So I think generally recognized as having a good structure of public spending. And there's also been fiscal caution in that minerals, what we call asset transformation. Minerals are assets in the ground, and they've been transformed into financial assets, very large government savings, human capital and physical assets, and at the same time there have been budget surpluses. Macroeconomic policies, as I mentioned earlier, the real exchange rate has been stable, so to a degree Dutch disease has been avoided. An industrial policy has been based around diversifying away from diamonds, in anticipating the day when the diamonds will run out, but with a focus on growing the manufacturing sector, which has been quite problematic and hasn't really been successful. On the social and demographic front, we do still have a very high rate of poverty. The headcount rate's about 30%. The data's not very good. The most recent data is from 2003. Inequality is very high. The Gini coefficient is about 0.6. And there has been rapid growth of formal employment, but nevertheless there is still high unemployment rate, about 25%, although the data is not very good. And that's despite a lot of investment in education. And essentially what's happened is that people have left agriculture and left the rural areas, and formal sector job creation has not been sufficient to cope with that migration. And a lot of it has been through, to the extent there has been absorption, it's been through government employment. If we look at distribution of employment here, this only goes back to 1994, so it doesn't go back to the very early days, but you can see that this is employment in agriculture. It's now about 15% or so of the labor force. And as that has declined, it's been absorbed in this next area, which is government. So essentially you've had government absorbing people, in net terms at least, and the other sectors have really not expanded as a share of total employment as agriculture has declined. In terms of rural-urban transformation, the agricultural sector has very poor basic conditions. The soil is poor. Most of the country comprises the Kalahari Desert. It's very sandy. Rainfall is very low and very erratic. And as I mentioned, we have a very low population density. And agriculture has had, as I mentioned, declining share of GDP over a long period, despite the fact that government has pumped vast amounts of money into the agricultural sector through all sorts of support schemes. Agricultural productivity and earnings are very low. If we look at labor force data, we can see that at the top, the two lowest paying sectors of the economy in terms of monthly wages are or monthly income, agriculture and domestic service. This interestingly I think suggests the labour market probably works quite well, because the first thing that people do if they leave rural areas is they'll look for jobs in the towns in domestic service, and as you can see the wages are about the same. But clearly it means that agriculture is not an attractive activity to work in relative to the rest of the economy, and you can see why people migrate. If we look at sectoral labour productivity, we can see that, again, agriculture is way down at the bottom at the left-hand side. Manufacturing and government, also relatively low productivity. As you would expect up here, mining, it's way off the scale in terms of mining productivity, water, finance and business services, etc. So declining employment, this is employment in what's called traditional agriculture, and that's defined as agriculture that takes place on communal land, which is the bulk of the country. And the data is rather strange and not very good, and Maggie and I have talked about this endlessly. And what it makes a certain amount of sense. If you go back to 1971, the data on agricultural employment from the censuses, labour force surveys, household surveys, steady decline exactly as you would expect, until in the 2006 labour force survey, suddenly the answer came that agricultural employment had jumped. And Maggie got very excited about this. And I said, don't get excited, it's a mistake. I don't know what the mistake is, but I do know it's not correct. And I still believe it's not correct, but we've dug into it. We can't find out what led to this result, but I don't find it, not yet. We're still digging. It's a very bizarre result, and my response at the moment is to treat it as an outlier. Luckily, there's a census taking place this year, so maybe we'll see what the true picture is. So we have declining employment in agriculture, but the story that I guess we get elsewhere is labor shortages in agriculture despite high unemployment. And I think it's a reservation wage problem, because what we have with all the investment in education, everybody's been to school. And once everybody's been to school and had 10 years of schooling, they don't want to go back to the fields and work for a very, very low wage. So they'd rather sit at home. So the rural economy is rather weak. It is quite diversified, though. We have cattle rearing and tourism are the only significant economic activity, and those don't cover the whole country. The rural areas are very dependent upon government spending through administration, schools, health system, etc., and direct subsidies. Also, private remittances are a major source of income for rural households, and in general, rural household incomes are quite diversified. They're quite diversified and not very dependent on agriculture as a source of income. And interestingly, 51% of rural heads of household are in paid employment, which again suggests how unimportant agriculture is as a source of income. Major urban-rural disparities, as you would expect. If we look at mean household incomes, this is again from 2003. We have an interesting way of dividing up settlements. We have urban, and that's on the left, and rural, which is here. And then we have this thing called an urban village, which is a bit like this intermediate urban area that people have been talking about over the last couple of days. It has a particular meaning in that it's a town, but it doesn't have an urban administrative structure. It's actually a town that's on communal land, and is very integrated with the whole communal rural district. But it's can't really be described as rural because it largely has urban characteristics. So a lot of the population does live in these intermediate urban villages. But you can see how average incomes, if this is the national median household income, in urban areas it's about 2.5 times as much as average income in rural areas. So big urban-rural income disparities. Much higher rural poverty rates, and the poor are almost entirely in rural areas. Although we have a 30% national poverty rate, in the capital the poverty rate is only about 5%. Very limited employment opportunities, a lot of migration. If we look at the percentage of urbanization, back in 1971 it was less than 10%. The results of this year's census are expected to show approximately 65% urbanization. And this is partly people moving, but it's also very much to do with settlements being reclassified. Settlements which may have been long ago essentially rural centers based on agriculture, as they grew in size and became less dependent on agriculture, they get reclassified as towns. So much of the urbanization is not to do with people moving, it's to do with reclassification or changing nature of settlements. Now, the second transformation, which is really facing the country now, the challenge is of firstly, economic growth rates have been declining. If we look at 5-year averages going back to 1975, you can see in the early days of the minerals boom, real growth rates averaging 13% a year, and a pretty steady decline, so that in the last 5 years, real growth, and that obviously took into account the global crisis, which affected the mining industry, but real growth only averaging 3% a year. So long-term declining growth rates. And as I mentioned, diamond resources are expected to be run out in the next 15 years or so. And if you've got an economy which essentially gets its standard of living from mineral rents and the minerals run out, you've got a big challenge. Either your incomes are going to decline or you better find something else. But so far, diversification policies have been very limited success. We have a very small domestic market, and so it's really essential that any new activities be export focused, but there are a lot of competitiveness concerns. Here I'm just looking at the prospects of the different sectors of the economy. It's as I say, diamond based. There's a lot of other minerals out there, copper, nickel and coal and all sorts of things, but they don't have the profitability of diamonds, so they're not going to have the same revenues for government. Agriculture, I personally think, has very little potential. The beef industry is quite important with cattle, but it's also plays a very important cultural role, and the cultural factors have made it extremely difficult to modernize the industry. Farmers essentially see, especially the many small farmers, essentially see their cattle as an asset and part of to have them for cultural reasons, and are very reluctant to respond to market forces, or not in the way that we would normally expect. Plus the fact that basic conditions are very poor. Manufacturing has been pretty unsuccessful. I think there's a lot of scope in services, in tradable export services, but it needs appropriate infrastructure. There are a lot of fiscal challenges facing the country at the moment. As I mentioned, government revenues have been very important, but they're declining, and it's expected that government revenues are going to fall by about 10% of GDP as diamonds start running out. As government revenues have started falling, unlike in the past where there were substantial budget surpluses, we now have deficits and accumulation of debt. And one of the characteristics of this long period of mineral-led growth and budget surpluses was that the government accumulated a lot of financial assets. There were very, very high foreign exchange reserves and high government savings in the central bank. And those have largely been exhausted. If we look at, this is government assets, net assets, so savings less debt, in financial terms, grew steadily. There was a bit of a gap here in the middle when government set up a pension fund for its employees and funded the whole thing in pretty much one go, which is, not many countries could do that. But it funded the entire pension liability of the public service, but then it was rebuilt. But you can see the last few years of budget deficits, government assets of financial assets have more or less disappeared. And if we take it as a percentage of GDP, back in the 1970s, government financial assets were equal to 100% of GDP, very, very large. And by next year, they're projected to be down to 2% of GDP. So you can build up assets in the good times, but Ghana beware, you can exhaust them very, very quickly when times turn bad, unless you have very strict rules about the drawdown of sovereign wealth funds. And Botswana didn't have strict rules about the drawdowns, and it's essentially gone. the other challenges, very dependent on, private sector is very dependent on government, and I think there's issues around how well government resources are used. The poverty challenges, I think, as I mentioned, rural poverty is very high. There has to be some I'm not particularly confident in agriculture, but there is some scope for commercializing agriculture for urban markets in particular. But I'm very skeptical about excessive investment in rural infrastructure. As we heard this morning, rural infrastructure is very expensive, especially in such a large, sparsely populated country. And I think it should only take place where it's justified by economic returns. In terms of migration, Botswana's had a long period of treating rural-urban migration as a bad thing, try and stop people migrating. I think that's wrong. I think people should be encouraged to migrate, and we should plan for urbanization. And the UN is projecting 80% urbanization by 2050. Sorry, last one. I think we need much more focus on competitiveness through appropriate public goods and infrastructure. Lots of money spent on education, but quality is not very good. Some of the markets malfunctioning, particularly the land market is a mess. We have so much communal land that doesn't really function on a market basis. I think we have to look at incentive structures across the economy. I suspect there's an anti-export bias if you look at all the structures of subsidies and taxes. A lot of regulatory barriers. Need to look at trade policy. And finally, as I mentioned earlier, the real exchange rate. Is it overvalued? Thank you very much.